In today's video, I'm just going to do a little review on timing, and this is what we saw last week as we were actually moving into February 9th. We had the S&P daily chart moving straight down, okay, and I wanted to look for dates where we might potentially terminate that decline. Okay, so that's where I do the timing work, and in this case I had cycles that came due anywhere between the 9th through the 13th. Okay, so we had the one cycle on the 9th, we had a high to high cycle over here that was the 12th, we had, let's see, this was a low to a high 618 on the 12th, a low to low cycle 100% on the 13th, and then another low to low cycle on the 12th. So when there's a cluster of timing cycles, what I do is I anticipate a possible reversal of whatever the market is doing. Okay, so it doesn't always work, obviously, but when you combine it with other triggers and signals that would suggest a reversal, it can kind of work pretty well. So this is what it did last week. It traded straight down into the 9th, which was the beginning of that time window. There were buy signals. And ultimately, if this low is any good, this is your potential upside target. But just because we have a target doesn't necessarily mean we're going to get there. So I always look at the next decisions, and I always look at what might get in the way of something, playing out a scenario against a zone. And I'm going to give you some timing on the flip side of that. So what we're going to do here is take this last low and run the same cycles from that low, and this is what it looks like. Click on the reports, and we're going to look for the next time resistance to the current rally. And let's see, we're a few days ahead of the game here, so let's look at it. Let's look at it from Friday. Okay. And here's the standouts on the histogram. This essentially represents the timing cycles, okay, that you can see here that are standing out for possible resistance to the current rally from this last low. So where does that come in? Early next week. Okay, so just giving you a heads up, actually anywhere between the 20th through the 22nd, we have some cycles that are standing out for a possible high. So does that mean you go and short everything? No, but you at least ratchet up your stops on long positions. Some of you might consider the short side if you are nimble and you know exactly what you're doing. Bottom line, I just want to give you this NASDAQ timing for a possible high, 20th through the 22nd. And it's something to watch, to anticipate at least a possible tradable pullback. Okay, so that's what I have. Have a great long weekend, everybody, and I will see actually some of you in the class this weekend, and otherwise I'll be back working Tuesday.